Good afternoon and happy Monday, Zinger Nation. Jonathan Mallard here, and another episode of Making Money with Benzinga Pro. Today, we're going to look a little bit at unusual options. My friend Zunaid will be here with us. He does the option squawk, and we've got some great plays to point out to you today. Let's do this. All right, so here we are talking about options today. And if you haven't already got access to Benzinga Pro, you can find that in the description below for a free 2-week trial. And you can check out all these tools for yourself. Now, what I have open here in front of us is the calendar tool. And specifically, I've got the unusual options activity calendar open. And this is basically going to show us single large orders that could indicate bullish or bearish sentiment from individual institutions or traders with large accounts. And there's a lot of data that you can see in here, but it's pretty quick and easy to filter it down to things that are really usable. Now you can see here, I already identified some of these at the top: AMC, Google, Amazon, COMM, DHR, and I found these this morning just as I was prepping for this session. But the way that I like to filter these down is by 3 main variables, especially for something for a swing trade situation. And the first one here is trade value. If you can see that on my screen, I've got trade value here. So this means that someone either paid or received $4.3 million for AMC puts. And you can see here that the expiration date is January of 2023. And so it looks like, since it's bearish, the buyers were being more aggressive there on these puts. And that is with a $95 strike price. So we can see that right now it's at $22. But anyways, trade value, that's just one way that you can filter this down. Another way is with volume over open interest. And so we've got this over here, vol over OI. So this is a ratio of the size of that one single order compared to the open interest, all the other contracts that have been traded of that type up to that point. So you can see here how this is a very significant sized order compared to what was previously open for that type of contract. So we've got trade value, volume over open interest, and then let's see here. The third one was trade count. So I don't actually have that on my table right here, but if I open up my filters here on the right-hand side and scroll down, we can see that I filtered this for a trade count greater than 15. So that means that all of these orders that are showing up on our screen here, and I'm going to let Zunaid in here too. What's up, Zunaid?
Hello, hello, hello.
I was just going over some of these unusual options on the options calendar, and then after, you probably got some really good stuff that we can cover as well. So thanks for being here.
Of course, of course.
But just to wrap this up, basically with a trade count, they have to sweep across multiple market makers or routes to get these orders filled. And in general, that means it could be more significant. They had to put more time, more effort into getting those trades executed. And so now I previously narrowed this down to these companies because I saw some stuff this morning that was interesting. Now a lot more populated today, but as I'm looking at basically the expiration date and the strike price and the sentiment, I might see some convergence there where we've got the same strike price and same sentiment. Let's see if I can find it here. I had multiple bearish puts on AMC. So people were buying puts on AMC today for a $21 strike price with an expiration date. All three of these have an expiration date of May 20th. And in total, someone paid about $1 million for those puts. So that's where this is just an idea generator where then I could say, hey, what do you know? This was all from 10:17 to 10:29 a.m. Eastern time this morning. I could click into that and then take a look at a more detailed chart inside of our system. I might zoom out a little bit here and say, what was going on at about that time? Well, it looks like it came down quite significantly. And, if they bought puts down there, they might be, I don't know, a little more concerned now if it was a day trade. But keep in mind, these don't expire until May. So there's definitely more time on the clock for these puts. So, yeah, Zunaid, thanks for joining us. I have some more examples in here, but do you have anything else that you really like to look out for when you're talking about unusual options?
Yeah, shout out to my son in the chat, by the way. Yeah, for me, it's all about, hey, what's going on in terms of, what has a catalyst and what are the options going to be swept on? So, for example, Twitter, right? You saw Musk go ahead and take approximately less than a 10% stake in Twitter. So that's why you got that move. I was play Twitter in the morning, the equity side and the option side. In the morning, the option side, I kind of failed at it as it came down below VWAP. But as they were coming in, they were coming to the $50 calls for this week and also the $55 calls for next week. Now, on TradeStation, I played the equity side of things and not the option side of things. But since I knew that, hey, they were sweeping into those options, you can see that right about, where is it? So right around here, I saw the bounce and we went ahead and bought Twitter here. Let me go ahead and actually increase the size of my screen. Here, is that good? Hopefully that's good for the folks at home. If you can see that, but yeah, you can see that right here, we got into Twitter around 47.66. Then I saw it go above VWAP and it's kind of consolidating here. And then we went ahead and bought 250 shares at 48.91. Now my stop loss was going to be below VWAP, right? And then as you can see, as it kept moving on up, we went ahead and took our profits right around 49.75, simply because that $50 was resistance. I wanted to get out in front of it. And again, the only reason I was able to get this trade is because we saw those options coming in. And those were the $50 calls expiring this week. And matter of fact, we went ahead and also called this out for the folks that were listening to the option squawk as well. So if you were listening to the option squawk between 11 and 1, we went ahead and called out that, hey, you've got these options coming into Twitter, the $50 calls and the $55 calls expiring next week. And that's how you can kind of anticipate a move, if you will. So got a chance to play that. But I mean, for the folks at home, I like to play options based on what's coming in, then look at the chart and say, okay, cool, it's above VWAP. I like it. I know that my risk off is right below VWAP, and that's where I'm going to get out. Then you kind of figure out where the level's at. You can see $50 on Twitter, then 51 based on the pre-market right there. And you can see, look at that. So if we go ahead and draw a line, let's just call it right there. You can see that's exactly where the high of the session is as well, which lines up with the pre-market high. And you can see now it's coming down. So if you wanted to get back in this trade, you can go ahead and try to, the closer you get the trade to buy to VWAP, the better your risk reward will be. I will say I am still holding, what do I have? I still have the Twitter $22 $55 calls. We scaled out some, but now I'm still holding on to those. But that was the biggest trade that I had in terms of off of options flow today.
Nice. And then I'll just share my screen again just to show them where, if any of you aren't familiar with the option squawk, that's up here in the upper left corner of Benzinga Pro. You got squawk equity for the stocks, and then with Zunaid, you have squawk options from 11 a.m. to 1 p.m. Eastern time. So that's where you could have found out about those options, even if you weren't looking at the table here. And if I scroll down, you can see here those calls that were coming in.
There you go.
For Twitter. Sorry, I just have to turn off this phone. It's going to drive me crazy. That's the problem. You got to turn off your phone, folks. But anyways, you got these calls coming in around 11:40, 11:48, around the $50 strike price there. 60.
Yeah, and look, once you, if you want to put it back to my screen here real quick, this yellow box is 1140. Now, obviously, it does not always work out this way, right? So there's 1140 right there, right at that area. Doesn't always work out like that, but you can see how it never really dipped below. And that's where, you kind of get that entry. Right below it is your stop out in case it doesn't work out. And you kind of have your levels of, hey, $50, 51, and then you scale out accordingly. Matter of fact, look at this. Where exactly is it trying to bounce from? Right here, you've got about $50, and right there, excuse me, you got about $50.24, and right there, almost to the penny, the low of that is $50.05. It bounced from there. Now it's trying to move on up. So you just kind of have to have an idea of where your levels are at. But my favorite is absolutely going to be VWAP. Love playing it off of that.
Awesome. Yeah. And so were there any other trades that came up today other than Twitter? Obviously Twitter, yeah, it's not every day you have a huge catalyst like Elon Musk taking a 9% stake.
Lululemon was another one. Now, Lulu didn't have necessarily too much flow to where like Twitter did, but if you look at my entry here, which is right about there, which is around 1243, I went ahead and bought 75 shares at 377, and then we went ahead and sold. That was on the Thinkorswim side. Let me see if I can share my Thinkorswim. Give me 1 second here. Let me see. I don't think I can besides showing all my account info, but give me 1 second. Let me see if I can figure out how to do that. But regardless, Lululemon, you had it kind of touch VWAP, but it never crossed below VWAP, and it kept on moving up. And it went ahead and took profits near the 380s. But same concept, right? You see options flow coming in. You say, okay, here's VWAP. Here's where my stop loss is going to be. And you can see it came down, tested VWAP one more time, and then continued making its march towards the 380s. So absolutely love playing any stock off of the VWAP. Really is helpful. I don't know if Tesla did that today or not. I didn't play Tesla necessarily, but for you small cap folks, what was it? TCAT?
Oh yeah, that's had multiple days.
Yep. And you can see here, I'm still in a position, but you can see along the red arrows that we've been kind of taking profits along the way. And keep in mind, for the folks that are watching, I trade on TradeStation, Thinkorswim, and E-Trade as well. But you can see here, came down to VWAP, tested it, bounced right back up, came back, didn't necessarily test VWAP, but came came right back up. And then same thing. Here's VWAP, held the support, moved up. So you just have to kind of figure out the best way for you to get your best risk reward. That's the most important thing. And here's a 10-minute, which is what I use. But you can just see VWAP up, VWAP bounce. Didn't really test it, but you had it as support, VWAP bounce. So again, not everything is like this, right? But it does help to use a VWAP over and over and over again. And, since we're talking about options, just in general, for me, Jonathan, you want, like, for example, the Twitter calls. I had some that expired this week, but I wanted to be a little bit more safe as I was waiting for the breakout over 50. And I said, hey, if I don't get it, and if it comes back to test VWAP, I want to make sure I don't lose 30% of my contract value. Right. I went ahead and grabbed the Twitter $55 calls that expire on April 22nd. So I went a couple of weeks out so that theta doesn't mess me up as bad. It still will, because it's still under 45 days to expiration, but I wanted to make sure that it was, it didn't mess me up as much as, like, say, a weekly would, if you will. So something for us folks to keep in mind. If you're kind of a little bit more risk averse, that's fine. Go out a month, go out 2 months, go out 3 months if you want to. Just make sure that the options you're getting into have more liquidity in them. So make sure that the open interest and the total volume is much, much higher than anything else. So if you're looking at your broker, right, if you look at Twitter contracts for, let's just say, April 22nd, you'll see that the $55 calls are way more liquid than, let's say, the $48 calls, right? Like, look how wide that spread is compared to the $55 calls. So make sure you have as much liquidity as possible when you're trading any type of options, because you don't want to be caught in that huge, huge spread.
That's a great point there. And so one thing that I've thought about is, you'll see some unusual options come through that are like deep in the money options. Have you played those at all, or are you aware of any strategies around deep in the money options versus those that are closer to the current price or out of the money options?
I'm not. And sometimes I do see like, hey, someone just spent 3 million on some stock options, but they're like 10 points in the money. Now, those could be related to, especially if they're blocks, which I don't pay attention to blocks, but those could be like, stock replacements, this, that, assigning, whatever else. And typically they want to hold on to those shares.
Right.
So they're okay taking those shares in as equity. I'm not trying to do that. I'm 98% cash every single day. So I don't want to swing anything whatsoever. So have I seen those? Yes. Do I personally have a strategy? Not necessarily. I'll just keep an eye on where they came in. And then if you want, you can just kind of get an idea of where the spot price is when those options came in. And then look at the chart and kind of base it off of that. And if you want to, you can play a spread, like a call spread, which is where you buy a strike. Let's say you buy the $50 calls for Twitter, and then you sell the $55 calls. That way your max gain is capped between between the 50 and the 55. Anything over that, the person who you sold it to starts getting the advantage. But you also are able to limit your losses as well and play the odds in your favor if things work out. But do I have this particular strategy I like? No, I mostly ignore them. I'll take a look at the chart, see what's going on, but that's about it. Marco says, I wish I had the cojones. For what though? For what? Options? Trading?
I mean,
courage for.
It sounds like with your way of trading, lots of times you're buying naked calls or puts, right?
Yes.
In addition to, we're just talking about spreads. I know on our mentorship program, Nick Shaheen, he's really big on selling credit put spreads or bull put spreads.
Yeah.
So for anyone who wants to play options but maybe is scared of losing, that you could pay for an expiration date that's farther out. They'll just be more expensive, but it gives you more buffer room. Or you could sell a credit put spread pretty far beneath some support levels, and that's where you just receive the money. And lots of times you only need $400 or $500 in your account for a small trade there.
Yeah, I mean, 100. Yeah, no question about it. And you can just kind of get familiar with it. What I'll do, matter of fact, give me a second. So I talked about, just for transparency purposes, give me 1 second here. Where is there it is. I'm gonna share that screen there. Let me see if you're able to share that here. There you go. So this is just a screenshot of kind of like what I was telling you guys, where I traded Lululemon. They don't want you to think I was just saying it, but here's Lululemon, right? Just off of 100 shares. That's all I traded on Thinkorswim, was 100 shares, and made about $274. Why? Simply trying to play it off of the VWAP and just letting it ride. Look at that. In this scenario, the purple is my VWAP line here. And you can see just nicely moved up, came back to VWAP, tested it, right? The reason I was a few minutes late is because I was at the gym, but you just put your stop losses in. And when I get done with my workout, I either see that, hey, you're eating ramen, or you can afford a little bit of Applebee's triple dipper, whatever it is. Just make sure you set your stop losses, right? Don't. One thing I will say, Jonathan, especially when it comes to options, and Marco, this might be good for you and anyone else. Sometimes people get so excited with those. Oh man, I got a 50% gainer. I got this, I got that. Let me tell you, on Twitter, on Thursday, matter of fact, Jonathan, if you can go back to historical while I'm talking, on Thursday, which I believe is the 31st, you had Twitter calls coming in. I believe they were the $43 calls, while Twitter was trading at around here. Matter of fact, let me do this. Let me go back while you're looking that up. Let me see, so we folks at home can know what we're talking about. I believe it was Thursday. You had Twitter calls coming in, and I was like, man, something is up. Why is someone buying so many out of the money calls on Twitter? And I didn't get into the trade. Matter of fact, here, I'll go ahead and share my screen while you pull that up if you're able to. Let me go ahead and stop sharing my screen. I'm going to share this. Bang, look at that. We're just going with the flow here. So you've got Twitter. I'm going to go look at this candle right here. You see on the volume how it's ticking up right here on March 31st? Yeah. About 30, 40 minutes before the close, you had call buying into Twitter. And again, this is the out of the money calls. And I was like, this is weird. People are buying $5 out of the money in like 2-3 days, whatever. But oddly enough, that last candle just dipped down. And then of course you get one more trading day of just sideways action, no real movement. And then you get that pop. The reason I bring this up is because I did not grab Twitter calls on Thursday. There are folks and friends of mine that I trade with that said, oh man, those Twitter calls, they made 400 or 500%. Now, what am I thinking? Oh man, I should have grabbed those. Oh man, I want 400% gainers. What happens the next time you see any unusual options coming in that you believe you want to get into? You're going to be like, oh yeah, I want to get in. You might oversize yourself without knowing how theta works and different things like that. And then you'll end up losing all your money because you oversized, right, Jonathan? Because how many times have we said, oh man, I'm down 20%. Oh, that's fine. I can handle 40. Oh, I'm down 40%. Let's just see what happens. Oh, I'm down 60. Well, at this point, I might as well let it go to zero because I don't want to sell it. And then it goes back up and I'll feel even more sick. Guess what? Next day, now you're down 100%. Right? The worst feeling I have, man, no joke. And this is actually what's helped me is on Saturday mornings, I get a notification whenever I make a trade on E-Trade, which is where I trade my options. Saturday morning, any trade in terms of options that expires, I get a notification that says, hey, 10 Twitter calls expired. And I know expired means they're worthless. So I hate seeing that notification on Saturday mornings. So I make sure to like position myself properly. And that's exactly why I go out a couple of weeks now, because I know that, hey, a dollar move on Twitter can wreck my contracts by 25%, right? So imagine if you got weeklies. Matter of fact, this is what I did in the morning. This is perfect. In the morning, if you watch us trade live, I got Twitter calls. I got weeklies, $50 calls, I believe they were. I got them here as it was trying to break $50. It came back. I got it when it was around $49. The stock only moved like maybe $1 down, but my contracts, I ended up selling at like a 35-40% loss only for them to come back up. Had I went ahead and got those next week's a month out contracts beforehand, I would have been able to be like, okay, cool. I'm down 10%. It's within my risk parameters. Cool. Now I'm up 25-30% as Twitter went ahead and hit almost $52. So do not worry about what your friends are doing and how many, because their gains or pains are not going to pay your bills. Their screenshots are not going to do it.
Right there.
So
that's good.
Yeah. And I mean, I've done it, right? Like during the pandemic, I lost thousands of dollars. I've even shared a screenshot on live trading. Lost, $20,000-$30,000, whatever. And it sucked because everyone else is making all this money. And I'm like, what in the world am I doing? So don't because then your emotions kick in. Right.
Yeah. And just to show everybody really quick about these calls from Thursday,
yes.
At that time, let's see, this is the 31st, right? So, Twitter was, somewhere around 38, 39. And look at all these $43 strike prices coming in.
There you go.
Call bullish, all around 320, 330. And, these aren't buy recommendations. It's a data point that you use with everything else, the charts saying, just like Zane said, why are all of these calls being bought out of the money right now? And then
they're 6-figure calls. They're not $10,000 or whatever, right? Those are 6-figure calls that are coming in multiple times.
Right.
So, that's where unusual options flow is to make your ears perk and for your eyes to want to look at the chart and see what's coming up, right? That's all it is. It's not telling you to buy. It's not telling you to sell. It's to say, hey, may want to keep an eye on this because guess what? Those contracts expire on the 29th. Anyone want to take a wild guess when Twitter is expected to report earnings? On the 28th. So immediately I'm thinking, we're about $4 or $5 out of the money. They're buying these to expire after the earnings report. I personally enjoy playing the earnings run-up play. This could be worthy. Why didn't I grab them then? Because we're in a market where you could get wrecked swinging, and I haven't swung anything since the past 8 months. I am 98% cash every single time, which is why I didn't want to swing these. But it's on my watch list of, hey, if this starts going, I want to be in it. And then, which is why obviously with the catalyst, it's like, cool, I already missed the move of the $43 calls, but now let me pay attention to see if they buy 50, 55. And that's exactly what they did. A matter of fact, while we're talking, see if you can pull up INTU, if you've got anything on that for today. But yeah, let's see if we can find anything on that one there. So you've got INTU there. You see the $500 calls? Yeah, you've got it up right there. That's 217. They were coming into those. And if you want to take a look, you've got INTU that's moving for the past 10 minutes or so as well. So, just some things you want to kind of focus on. Unusual options is just for you to say, hey, look at the chart, what catalysts could be coming up, and then you could go with that. So like when the whole Tilray stuff was happening with Congress or House or whatever it is passing the bill, you know that, hey, this is why they're coming into those calls. This is why I want to pay attention to them. And you just try to play it that way. Matter of fact, I'll go ahead and switch back to my screen here. You can see Tilray, I went ahead and played it. It's bought at 737, went ahead and sold it at 745. So nothing too crazy whatsoever. Just hit my limit order. I was out. As you can see, that was my resistance. The previous close, I had an idea that, hey, this is going to be an issue. Went ahead and just took gains there. Nothing to write home about, but just giving you the same exact process on different stocks. I didn't hit a home run with this, but I was able to make great money using the same exact process on Twitter and on Lululemon. So, you know.
Awesome. So
repeat the process.
So yeah, basically you just found the base there. You had mapped out your previous was that previous high or previous close?
It was the previous close. So this pink dotted line is a previous close, which oftentimes I have found, not always, oftentimes acts as support and resistance. So in this case, I believe that it would be resistance. So I went ahead and got into the trade, knew that the low of the break of VWAP would be my out. And then we were able to go ahead and catch the move to the previous close. And that's about where I got out on that, in that candle right there.
Awesome. Wow. AMD is ripping right now.
Well, let's take a look. AMD is ripping. And this is the daily that I had on AMD drawn out before. You can see it kind of tested it. It kind of came back in, and now it's trying to break out of the same spot. The next resistance that I personally have on AMD is about 120. Obviously, you've got a little bit of room to get there. But yeah, AMD definitely is looking nice for today. I am not in this trade. I missed this one. But, and look, again, here, say you get in above VWAP, and you know that, hey, my resistance is about 110. That's about where I want to take profits. Cool. Below VWAP, you go ahead and get out. Come back and test it. You get in, drop, you get out. It's fine. Look, it didn't work here, right? There's no 100%, but you manage your risk. And what do you know, by the way? Previous close, pink dotted line. That's what held as support, and it bounced right back up. You're always going to find reasons to get in and out of the trade. The last thing you want to do is just hold on to a loser, because not only are you risking losing more, but you're not able to use that money to get into other trades. Because if I would have held on to this, and if this didn't work out, I can't get into Lululemon because I'm stuck holding a bag of losses here, you know?
Right.
So something to keep in mind.
And just for some of the newbies here, I mean, obviously everyone has their own thresholds, but is there a percentage that works well for you? Is it a percentage or a dollar amount on the stop loss?
I will tell you what I should tell others. You want to go ahead and have every trade have the same amount of risk, which is called R to R, right? So it's risk to reward. That's the quote unquote correct answer, if you will. Now, you've often seen me, hey, you were risking $3 on one trade, 16 cents on another. What's going on? For me, it's also then. So the first basic is R to R. Every single trade, I'm going to risk $200 and I'm going to look to make at least 200, or 2-to-1 risk reward. So I'm going to risk 200, but I want to make sure I get 400. That's the basic that you should start with. Then you can kind of take a look at the chart and be like, man, I know resistance is right around here, so I want to take my profits before then, right? I'll give a quick example on Apple here. You can see I traded it. We bought. So Apple, I was in here. It broke VWAP, but it held the 177. And I said, okay, let me see if it can get above again. If it does, I'll take some more shares. And I did. I grabbed 300 shares at 177.28. Then we went ahead and sold them at 177.73. So nothing too crazy to write home about, but I knew that, look, this resistance is where it's had an issue getting past. So let me just take some profits a little bit under it. And that's exactly where we're able to take some profits. But to answer your question, check out what risk to reward means. Make sure you're risking the same amount every single trade and get in that habit. Doesn't matter if it's $10, $20, $30. Have it be an amount that your nerves kick up a little bit, but not enough to where you're staring at the screen, praying to every God that there is, because oftentimes people are like, oh, I'm going to trade 10 shares. Well, if you don't care about 10 shares, your emotions aren't going to come into play. And for me, I want people's emotions to come into play so that we can manage those emotions properly. Because then you'll trade 10 shares and you say, oh, I'm a god at this. Then you'll take 100 shares and then your emotions kick in. Then you don't know how to handle it. And now you're risking rent money, which you should never do. But
yeah,
I know it's 3:30, but that's my monologue there.
That was great, Sinead. Thanks. So make sure you're paying attention to those unusual options on Benzinga Pro. Watch your risk, pay attention to those levels, and tune in tomorrow for some more tips about Benzinga Pro. Thanks. We'll talk soon.
See ya.